Hello traders, and welcome back to another YouTube video. Thunderbolt here, and this is volume 6 of the weekly outlook videos. So apparently I was not able to record this video on the weekend, so I'm doing this on a Monday morning, which is still fine. Okay, so we'll be able to look at what we actually expect in the course of the week, and as usual we'll start with DXY. Okay, then look at EU and GU, that is the majors, and then look at gold. So without further ado, let's get straight into the video. So we start by looking at this weekly low, all right, that was taken out. Okay. Then what else did we have? We have this EURUSD over here. All right. Now, if we go straight to last week, we see a couple of weeks ago. What did we have? We took out this high, so we moved from sell side. So this low was still relevant. Why? Because we took out sell side and now we were expecting internal range, but you can see internal range was violated. So what did we expect? Expected to take out this as a relevant high and take out this as well. Okay, so this high was taken out, and when we took out this high, we expected the next phase of price, which we had this consolidation inside of here. Okay, so what happens when you have consolidations? You expect one side of the range to get taken out. And since my bias was bullish, I wanted to see the low get taken out. And then now we can go for the high. So to clean up the chart, this is what I expected to see. And that is what I had last week. Okay. So now if we're actually going to continue bullish, what's my next draw? So my next draw is this consolidation high. Okay, and then this high over here. Eventually, if you are going to continue bullish, I want to see this high go as well. All right, so for this week, what did I expect? I expected to see an open, low, high close. Okay, so I wanted to see something like this. Now let's go to the daily time frame. So our bias is bullish on the weekly time frame. So on the weekly time frame, I want to see buys. Now there's two things I wanted to see. Okay, so if you're going to sell, to trade lower first and then trade higher, I want to there's only one. I want to look for an array where I can expect the low of the week to actually form. Okay, so if you expect the market to trade lower, okay, so I want to see them weak form in this upper half. Okay, so if I go to the daily time frame, I need to look for arrays where I expect to see that happen. And what do we have? We have this daily fair value gap over here. Okay, so this is where I expect the market to trade lower into, okay, to trade higher. So today is just on a Monday, and what you can see is the market traded lower and opened higher. All right, so we expect this as our first scenario, all right? But just in case that doesn't happen, the market could still open and trade higher first, all right? So what we'd expect is the market to trade higher, take out this our drawn liquidity. So this would be a case of external range back to internal range, okay? And then probably again trade back to target this external range liquidity. So this is trade scenario number 2. Trade scenario number 1 is we trade lower, create the low of the week, and then target the external range. Case scenario number 2 is we trade higher, take out the external range, and then we can always target the internal range, this fair value gap, as our internal drawn liquidity, then target the external range liquidity in future. So that is my outlook on DXY. Let's look at GU. GU, again, we start on the weekly time frame, right? What did we have? We have this high over here that was taken out. So after taking out this, we expect the market to trade back to internal range, but you can see that was violated. And what we have is this low was actually taken out. And you can see after this low was taken out, you had a short retracement, and then we proceeded lower. Okay, so after this really huge expansion, what did we have? We had the next phase of price, which is a consolidation. And by consolidation, I mean this inside bar. Again, with every consolidation, what do you expect the high to get taken out or have SMT? We had that high taken out last week, right? Which is what I usually want to see for consolidation. If I want to trade lower, I want to see the high get taken out first, the high of that consolidation. And that is what we had. So what can we expect for this week? I wanted to see an open high, low close candle, right? This as our first draw. And then this as our ultimate draw on liquidity. Okay. So if we know we're expecting the week to actually trade lower, what do we expect on the daily time frame? Because we expect an open high, low close, we expect the market to form the top wick. Okay. And the top wick should actually correspond with the high of the week. So where do we expect the high of the week to trade from? If you go back to the weekly time frame, you can mark the whole of this candle. You can just mark the EQ, whichever you prefer. So I'd want to see the high of the week form in this area over here. All right, as that inside of that fair value gap. But then again, this is scenario number one, where the market opens and trades higher like that, and then trades lower. And then we can target this external range liquidity, but also seeing where the market actually was, it's easier to take out external range liquidity, all right, then retrace all the way back into this fair value gap. So scenario number two is we trade lower, okay, and then we target this fair value gap as internal range liquidity, and then in trade pro trend to target external range, and ultimately this low over here. So what we just need to do is wait for the market to play, because based on the strategy that I usually trade, I always want to trade from swing points like that. If you're trading bullish, and if you're trading bearish, I always want to trade like this. Okay, so these are the zones that I always want to wait for trades. Okay, so swing points. So the market will either expand from a swing point or retrace from a swing point, expand from a swing point, retrace from a swing point, or expand from a swing point. So at this point of here, at this point over here, we are somewhere in here, okay, inside the expansion phase. So what I want to wait for is I want to wait for the retracement. So the retracement will come after we've taken out a relevant swing. So I can trade from this, targeting the internal range, or I can wait for the market to retrace back to the internal range, or I can wait the market to retrace into the internal range and then have trade the expansion, which will be somewhere here. So this will correspond to this over here where I trade the expansion. So basically that's my whole model. So at the moment, I don't have anything to trade. I just want to see how the market actually reacts. But these will actually be my two case scenarios. Let's look at EU. Again, last week, if you watched volume 5, I'll link it above. If you watched volume 5, then you'd know that we actually killed the market last week. Okay, so last week was a really nice week. Everything we talked about actually happened. Okay, so I expect nothing short this week. I expect us to also kill it this week. So looking at EU again, we took out this high. Expect the market to retrace into internal range. This fair value gap was violated, and we had another bearish fair value gap to trade lower. Okay. We also took out this low, and now I believe we are heading to take out this low as our next draw on liquidity. What do we have over here? After this really huge expansion, we either retraced back into this fair value gap, or because this was a consolidation, we take out the high of this consolidation to continue lower. Okay, I have already explained that. So now what do we have? Again, we took out this high. So this is our swing point, which means we are now expecting again another open high, low close. Okay, take out, target this, and then this as our next strong liquidity. So let's look at the daily time frame to see where we expect the high of the week to actually form from. Okay, so if you look at EU, we have a short fair value gap over here, very small one. Okay, So this is where I was expecting the market to retrace back into trade open high. Okay, but it is still valid as we're still on a Monday, and this week has a lot of news. Right, this week has a lot of news. So what I can do is I can just this is what we have this week. Okay, so Monday we have Powell speaking. Okay, so I believe this is this week. So you have Powell speaking today at 5:30 Kenyan time. So today can also be a trading day because of this. We expect a bit of market movement. On Tuesday, we have job openings and we have consumer confidence. All right. This is not a very high impact news, but job openings should provide the volatility for the market to expand. On Wednesday, we have this ADP non-farm employment change, and we also have retail sales. Okay. And manufacturing PMI. So we expect some bit of movement on Wednesday as well. We also expect movement on Thursday, where we have unemployment claims, and on Friday, where we have NFP. So I'd personally not trade Friday, but all the other days are trading days. Okay, so we can definitely expect some bit of movement this week, but what I'd want is to see some sort of manipulation. Okay, so we either take out this previous daily high, and then I can definitely now start looking for expansions lower. That would be very ideal. So before I see any sort of liquidity purge or any continuation purges, then I would not be interested in looking for opportunities to trade. So you'd actually know that if you watched any of the liquidity videos that I've actually posted, part 1 and part 2. So if you've not, please go back and watch those so that you can also understand some of these outlooks. Okay, so moving on. This is where I expect the high of the week to form. Okay, so case scenario number 1 is we trade higher into this fair value gap and then target all this as external range. All right, which would be very ideal as it fits in with my weekly profiling. Okay, the market could now, if you look at EU and GU, there's a very huge difference. On EU, there's quite a bit of range to target before we reach some of these relevant lows like this. Okay, unlike EU and GU. So the most likely case scenario for this is we trade higher to this fair value gap and then target all this. Okay, if the market does something like this, trades lower on EU without giving me an opportunity, then this would not be an opportunity for this week to trade higher to target the internal range liquidity. Okay, this would probably be not this week, but the other week, second week of April. Okay, and then probably the third week would be to trade pro trend to target this as external range liquidity. But all this is just an outlook. So in the course of the week, we usually come up with concrete trading ideas that are actually executable. So if you'd want to also look at them, we usually post them in our free market, free WhatsApp community. So link will actually be in the description and you guys can actually join in. Let's look at gold on the weekly time frame. Again, if you watched volume 5, then you know that we nailed gold spot on. Okay, so it was very spot on. We expected the market to take out this low and then expand higher. Now, looking at this type of candle, okay, we closed above the low of this previous weekly low. Okay, so what can I expect? I can expect an open low high close candle, which you can see is what we are forming. Our fast drawn liquidity is this previous weekly high. Okay, now we have this really huge fair value gap over here, and there's no telling if this is internal range, external range, back into internal again to continue trading low and targeting this. There's no way to know. Okay, or the market actually violates this fair value gap, okay, to continue higher, to taking out now the all-time high. All right, there's absolutely no way to tell that. So we'll just have to wait and see what price action does, and then we'll react instead of trying to predict where price is actually going. So what do we expect? We expect an open low. So we expect one of these days, can be Monday or Tuesday, to form the low of the week. And then we can look for buy opportunities, continuation trades rather, to target this previous weekly high or the consequent encroachment of this fair value gap, which is that. Either way, either one is valid. So we can target this and this CE as we wait to see how the market behaves, see if we can continue looking for buy trades to target the all-time high and some of the highs above. Let's look at the daily time frame. So on the daily time frame, what we have now, this looks like a consolidation. Okay, so I don't see any sort of relevant swing. Okay, so this looks like the range low and the range high at this particular point. Okay, so I'd rather want to see, what I'd want to see is either take out this, okay, and then trade lower, or trade lower, take out this low, this consolidation low, and then trade higher, okay, unless there's SMT. So if there's SMT at these lows, then it would be very ideal to continue trading higher. But at this point, I don't see any sort of meaningful swing point that I could actually trade away from. All right, so I have already explained my model. I always want to trade away from consolidations, and also looking at the daily time frame, the momentum is lower. So this consolidation could just be the next phase of price. And what we could also expect to see is the market trade higher into an array, probably this fair value gap that also lines up with this weekly consequent encroachment, to continue trading lower, ultimately targeting this low as well, and this consolidation low as our next draws on liquidity. So we have that fair value gap over there, on the daily time frame. So we can delete this. Okay, so there's absolutely so many ways of trading this. So you could still trade higher, follow momentum. Okay, and then if we get to this point and you get a confirmation, then we could always trade lower to target these lows as our draws on liquidity. So if you guys enjoyed this video, please don't hesitate to leave me a like and a comment. You could also subscribe and share this video, and I hope to see you in the next weekly outlook video. Bye.